Hey everyone, welcome to your daily update for SOL and BTC. Got a lot of timeframes to cover today, and a lot of them do have just pretty much the same confluence on the higher timeframes. So looking at liquidity, the one-day liquidity is flipping bearish, which is good. It was just too bullish, so now we're starting to see that pullback. I actually had expected we'd go a little bit higher with SOL yesterday. I really thought we'd push up to that 238 level, but it appears not. So we're heading down. Now, our daily support sort of kicks in when we get down into the about that 212 area, which would pretty much be a complete wipe of all of the liquidity to the downside on the one day. And then we've still got those targets 238, 240 to the upside. As far as BTC, it's kind of interesting because it's had a lot of hard closes and it's got a lot of high time frame support, but so it does beg the question of how far could they push this down. They'd have to start actually breaking some of that support and flipping it back into resistance again if they want to really bring it down to these sort of 118 or lower levels, which maybe is the plan. So at this stage, I'm looking to see how it reacts when it sort of hits each basic 1,000 increment on the way down, with the key level on a high time frame on the chart showing up at about 114. So if it was to do another run up to the upside, then yeah, you've got liquidity up there to 127, and all of those moves are basically just they're in play. It's just a case of when. So looking at the 7-day liquidity, it's more even. So this suggests that there's plenty more to take to the downside, and that's where that 114 level starts to really show up as the bottom of the 7-day liquidity. And on SOL, that would sort of line up with them going down and hitting that 212 sort of level. And as you can see, it's probably going to be heading down even during this video. Actually, just looking at that, we're right there on the edge of being able to cascade all the way down to sort of 214, 213. And then looking at the 30-day, 30-day is bullish on Bitcoin. So people just do not believe it's going down. And yet it's still it's flipping a little bit bearish on SOL. So people are starting to think, okay, cool, it's going to dip. And they're probably right. But where it stops, the main key levels are still 189, 204, and then daily sort of support around that 210 to 212. And then we've got other areas that can definitely bounce, like 216 can definitely bounce. But whether it would hold and actually give you much more of a push up into the top resistance is a whole nother question, because it's relatively low time frame support compared to some of the resistance that's we've rejected off, like the weekly. So see what this looks like from the other direction. So we're starting to develop that liquidity there. So if we sort of scroll this back, the reason it really didn't look like we were going to go back up was just because we didn't really have anything to push into in these sort of gaps that were created. But we're starting to get some of that liquidity forming up there now. So as this evens out, it changes the playing field a little bit, and it means that the price could push up or down, which actually makes it kind of hard to choose a direction. Looking at SOL, same sort of thing. If it was to get to 225, there's just a big air gap. And although there is all these big juicy red lines up here at about 232, and that potentially is where it'll go based on the 5-day move. When we look at that later, if we close the 5-day under trend and it bounces back up to reject off the backside of the trend, it might end up taking that 100x leverage that's up there at 232 before it rejects and goes further down. So yeah, just that could go up there, then come down here, or it could just leave it there, let it get confident, let this gap in here get filled up, go down and then up. So it's all going to come about depending on how it closes. Okay, so at this stage I'd probably look for, if there was a kind of a bit of a bearish fake push, it would probably be to that 232 level. and I'd still expect it to actually reject and potentially come down based on the 5-day close. So let's have a look at these charts. So SOL strength pretty much has about, what do we got? 1 hour and 46 minutes to pull back up above the trend. Now it's not in a position for this candle to break the trend, but it is in a position for the next one to break the trend. What it's effectively bounced off is the higher time frame support level here, which is that 18163. So you could see a push back up to retest the back of the trend. You could see it push back up into the whole candle up here. And that may be a little bit of a fake move on daily open if it was to push back up in price and strength into this area. Really, it would have to get tomorrow back up over 186.39 if it wants to get back to being bullish. But at this stage, it's just been a constant rejection off the 18834 level on the daily and the range trend created. So yeah, I wouldn't say this is very bullish in the short term. We should probably open a new candle, maybe test the backside of the trend, maybe hit the hold level. Depends how bearish it wants to be, really. And yeah, unless we get back up over that 186.39, then I'd expect more downside in the strength. So it's not our first bounce off the support either. So it was generated back here on the 27th of September, and then this was sort of our first bounce through these days here up to the 1st of October, and then we had that push up, which broke the trend, created the new trend, and then we've just been rejecting from that trend ever since. So looking at safety assets. So back on the 29th of September, they created this support level through here at, what's that, 64.91 on the daily. And then up here, when they failed to actually get back to it, it became sort of a higher time frame support. We've had the dive down through that level, and then it's pushed back up. So this sweep here was kind of a bit of a fake pump, really. It's pushed down through there, it's come back up. Now it still hasn't broken the downtrend. So tomorrow could open up, retest the back of this, and then have a bit of a pushback. So all sort of lining up with maybe a bit of a sweep and then a pump. But really what we need this thing to do is we need it to close a day completely separated from that 64.91 line. We really need it to be somewhere in the next couple of days, because otherwise it's going to convert this level here to high time frame support, which means that you'll have 64.71. So then there is another support level because we've just hit that break and we've gone back up. So yeah, it's quite important that basically every day hereafter we at least come down and hit that line. If we don't hit that line, we're just generating more support, and eventually this trend will break and this will go up, and alts will continue to dump. So basically at this stage it's looking like it's BTC season if this thing keeps pushing up, and stable season if this thing keeps pushing up, which I find kind of really ironic, because there was just a notification came out from TradingView that says alt season started. So there we go. Let's have a look at the totals. So the totals on the daily show that we might get a bit of relief. So it's so this is total 2, so it excludes BTC. So just basically looking more at your riskier assets. If it is to close over that 1.7 area, then that means we are technically closing above the interior downtrend. We're not hard closing anything, so effectively it can still drop, but we will be creating a range trend on the underside here, and that range trend, which I should use the right tool and not be a muppet. That range trend that's sitting down there has a bit of confluence with the reversal of the hold level from back here in 20th September. So, and as long as it doesn't close underneath 1.69 today, then we could get a dip down, so like a further dump, but then the bounce off that range trend would send the price higher because there's no hold level to actually stop it. So that's looking like there could be a bit of relief if we do come back down to that level and then could bounce up from there. The most bullish scenario is, of course, it just opens the next candle and bounces off the top of the break level. And of course, the bearish scenario is that it actually closes under that break level and rejects off the backside of it to push down. So it's like most days, it's just sitting in an exact spot where it teases us with will it go up or will it go down, and we just kind of have to wait an hour and 38 minutes to get an answer. It is breaking the interior trend today, so we will get a new trend forming. But as long as the wick stays that long, it's not actually bad. So it could, move the trend, dive down, get support on the new trend, bounce up, no hold level. So it would just have to come up and retest these same resistances, etc. It may even come back up and actually just retest the backside of the broken trend, which could even lead to a higher high. So yeah, it's not, the totals are not overly bearish based on what the outcomes could be of the structure. They look bearish now because it's rejecting off resistance and all of that kind of stuff just looks, bearish. And you look at this and it's pretty much all red apart from ASTER and PMP. Gotta love CZ. But yeah, that's it's not overly bearish really based on what it could do from that point onwards. As long as we close over that 1.7 level, then that's not overly bad. So let's have a look at DXY. Yeah, so DXY adjusted is pretty much doing the same thing. It's breaking trend. It's going to move the trend. Yeah, as long as it stays over 3D 1.84, there's no hold level. And yeah, it's just in a rejection of resistance. So this is just pretty normal, really. The break level, the structure of these candles is a little bit off based on how it's been calculated, but pretty much looks like it had a break level hit, had a retest, had a dump. It's creating a range trend. It's actually still above the previous broken trend. So yeah, it's not really looking overly bad long term. Just means maybe a bit more pain short term. Okay. And if we take stables completely out, the story is a little bit different. If we take the stables completely out of it, because the daily is going to create a hold level at 3.9, and it's on the wrong side of trend. But it's still inside its range. So where this becomes quite important is the candle needs to stay. We'll get a new range trend down here as well. Basically, it needs to stay up inside that range, which is about the 3.85 T. However, with the hold level there, we may actually see that it pushes up and rejects off the hold level or the backside of the trend and tries to push down to break the bottom of the range again, which would mean that tomorrow touches it. So then you need a couple more days after that where it doesn't touch it, so it can actually create support. So to do that, it may have to come back down and use the down sloping range trend, which is not ideal. But you do have some high time frame broken and untested support sitting there at 3.79 now on the daily. So that was a prior origin level that's been hard closed. Very questionable as to whether that got retested. It's on a very, very, very fine level it didn't get retested, but there can be such things as rounding errors when you're dealing with some of these charts. So yeah, this is looking like push up, dump down. Yeah, it's definitely looking like we might get a bit more downside before we can get any real upside. Okay, let's have a look at BTC. Okay, so we have heaps of closes today. So we'll try to get through this quickly. But the 1 day is definitely looking to have a bearish close with a hold level engulfing the top candle. It's going to create a new interior trend. It seems like it might be just trying to come down and actually retest the broken range trend down here, which is kind of, that would be, in my opinion, probably the most bullish dump it could do, which is just going to be down to retest these 120s. So we sort of knew that would have to come because 120.826 was that key level from yesterday where we've been hard closing it. We shifted, or we ran into the topside trend, we ran into the break level. That was our first support level. So we've hit that first support level, and now it's a case of whether or not the price is able to push up from here, or whether or not the hold level up here, which is going to form at 123, somewhere between 123.025 and 123.416. So whether this hold level actually is capable of holding the price and breaking the trend, because we'll get the new trend forming, we've got the range trend, we've got the horizontal support. There is also the older trend that was broken, and we may be losing that again. So sometimes these trends can actually be lost. So you hard close, but then you dump down below and then you lose the trend. So pretty much everything from 122.6 upwards is resistance on the daily. And from a support perspective, if it comes down much more, like if it was to come down to even sort of 121.4 by the end of the day, then it would be in a position to open on the wrong side of the newly established trend, reject, and just keep pushing down. So that's kind of how they do these really bearish dumps, is they create new trends, push the price down, open on the wrong side, reject, and go. So as far as important levels, if we lose this level, then there's another one there at 120.128, which is capable of holding price, but it's not really as strong as what the 120.826 level was, apart from the fact it has the range trend, which would be more realistically the thing that would actually give the support. So if we lose that, then down we come to 117.6, which would sort of be that next key level. And then if we lose that, well, it just keeps coming down. But if we lose the new trend created today, the one that it's anchoring from, which is where price would try to gravitate to, is down about that 114 area. And so that, to me, is the area that you're probably going to see a lot of confluence-wise in the high time frame, and quite possibly where the daily is going to try and push itself down to, if it goes on a mass liquidation spree of all of these bullish longs anyway. Okay, so let's have a look at the 2-day. So 2-day has found support on that range trend at the 120, but it may be looking to create that hold level at 122.184. So if it creates the hold level, it's going to try and break the trend. And there is another range trend that will, which is coming through there. Oh, alerts. What's that? Break created to the upside. Okay. So we've got another range trend coming through there. So it may find support. It's all really a case of whether it loses the 120s. If it loses the 120s, then you're going to start to see that big drop. Also just normal things like a retest of the break level here at 119. So it can wick into that and then go back up again. It hasn't lost the level if it does it. However, it would have to be some pretty quick dump if it was going to come and retest some of these lower levels, like 117s and 116s. That, I think, unless it just did it in one single, nasty candle, it would become more of a correction if it sort of started to slowly work its way down there. So, and what are we about 112 roughly for the main trend running through there, and a retest of some of these range trends about 112. So there's plenty of things it could go down to if it does drop down to retest any of that. But you've also got that range through there, which it's recovered but hasn't retested, and that's at that 114 area. Okay, so looking at the 4-day. So 4-day rejected range trend, it rejected break level. The bounce of the 4-day came off the previous trend, which was down here in the 120s, but it never hard closed it. So unless it actually closed it up today on the 4-day, which means a close over 122.184, then it's not hard closing this trend. So that would then lead it to want to push down a bit further, which basically gives you the 119.8 level. You've got the break level, which hasn't been retested or hard closed down here at 115, and then you move into your hold support candles. That was 117, and then you move into your hold support candles at that close to that 115 area. And you've got the range trend running through here, which was hard closed again by this candle from the 30th of September, and that's kind of coming in at about the high 113s, which potentially by the time the price got there could be that 114 level again. So there's a bit more down there at that 114 level, which actually looks like it's not the bottom, it's not the actual range trend. The actual loss of the range would come if it closed below 109.8, but yeah, it looks more like it's just it's more just an interior trend of the range. So yeah, that's basically the bottom interior support before it puts itself in a position of being able to lose its entire range. So that makes sense that it would potentially go and test that before moving up. Looking at the 5-day close, so pretty much you've got the same levels. So this candle will hard close the hold from back here from the 13th of September, and the bottom wick of that is again that 114 area, which has confluence with the trend as well if it was to move there in the next sort of 5 to 10 days. However, this is hard closing the 119 level, which on this time frame is pretty good support, and then it's also hard closing the 117 level, so you'd have more support there. So there is some of the stuff which just doesn't quite add up, or if it is going to retest these lower levels, it almost just needs to be a pretty quick event rather than a bleed, that's for sure. Okay, looking at the 7-day rejected off the trends. It's not hard closing anything really. It is still above the prior break level, which is that 120.128, so it could bounce off that and go up if it wants to be really bullish. Failing that, it's going to have to go down to the 117, 116s if it's wanting to find the next level of support, and the range trend is running through about 115, and if it was to retest the prior trend, that's about 112,500. So bottom of the hold, is it hard closed? Yes, it is. Bottom of the hard closed hold is about ranges between about 113.3 and 114. So yeah, it's hard close based on the wick, it's not hard close based on the body. So this kind of stuff's pretty experimental, but quite often if a whole candle gets violated by a hard close of the same time frame up within the hold, the price can come back down to actually retest the bottom of the candle, just to confirm that it is now actually support rather than resistance, and then that would actually give it something sort of between a 114 and a 113 retracement. Okay. 8-day. So yeah, levels are a bit higher for trend, etc. on this, but still it's failure to actually break the break level. This is the big problem, and this is sort of why I say you should always TP into high time frame break levels, because worst case scenario, it goes above it, comes back down, and usually hits it and then goes up. Best case scenario, you TP'd up here at 124, and then you just sit back and wait and just see if the price continues to come down from there, which is often the case. And one of these break levels at some point could even be this one, will be the top of the market. It'll just hit that, it'll pull down. You'll probably get one more shot at getting out of it, like it'll go up and retest it after a certain amount of time, which is usually why you get that sort of action like this, before you move into a substantial correction. So, but yeah, one of these levels is going to be it at some point. And as it currently stands, the next candle is going to open above trend, so it does have the ability to bounce from even just levels at 120 are still capable of bouncing in this case and going up, so you may not get those lows. Okay, 10-day. So 10-day is going to be above the break level but not hard closed. All the same levels apply, so any retest could happen from 118, 116, 114, but a lot of the really lower levels are pretty much off the table at the moment. It should give a bounce off these levels, and then if that bounce fails at some point based on trends or break levels, then then maybe we go lower, but at this stage it doesn't look like it's going to be capable of hitting that 107 based on these time frames. Okay, and again, rejection off trend and break level on the 14-day. 116 would sort of be the first level that would probably try to go to. Trend is sitting down there at 114 for the uptrend. So it's 113.4. If it bounces off the wick of that candle, if it goes to the body, that's a bit lower, but yeah, it's sort of everything down in that area. If they were to do a good solid sweep of the liquidity. And 20-day is going to close probably above the break level, looking at that. So again, it could bounce off the top of that and just move up, or it could come back here to retest the range trends, plural, because there's actually two of them that are getting hard closed here today, and that price would be about 114.2. So that there's a bit of logic in retesting that, just based on it's two different range trends sitting in the same place. So 28-day, it's going to create a hold level. Failed to accumulate back to trend. This is the kind of thing that should start to get a little bit concerning for people as far as end of markets. If you don't actually have enough buying pressure to get back to the trend, then typically what happens is people agree it's game over, and then you might get one more sweep push to the upside, and then that is game over. So yeah, looking at this one, it's got an untested range trend up there at 143, and it's failed to accumulate back to the trend there at 126.9. So you've got the next trend up there at 136, and then a retest of the broken trend and the range trend all sitting at 147. So, you know, if we get a dip back to anything from, what's that, 117, prior retest of previously broken trend is about 114 again, there's that number. If we get a pushback to 114 and then it goes on a full send up to 144 and it does it quite quickly, that's definitely an area to be laddering out as it hits these trends, because that could be it as far as a sweep up and then a dump. So see, 35-day is closing above trends, not hard closing anything. So realistically, it doesn't mean much. It could push up, reject down. If it bounces off the trend, then it's about that 115. It's creating a hold level there at 117. So any of those levels again could push it up, but and yeah, 40 days not doing, it's not hard closing anything. So, and the 56 has pretty much completed its previous move off the backside here, and it's gone up, it's run into all these trends and it's pulling back. So this is going to open on the wrong side of all the resistance, and so it could push up again to retest. I mean, there is the chance that it just goes absolutely full ball and comes up to retest some of these higher broken trends, but I guess we wait and see if that happens. And we've got 70-day. So some of these are a bit, you know, to me they're almost a bit contradictory to some of the medium time frame stuff, because this is actually hard closing and breaking out of the trend that's running through here. If it was to do a retest of both trends at the same time to be efficient, then that would be about 113 to 114. And then if it was to retest the prior broken trend, it's yeah, it's heading up to 200 basically, which is, don't know, maybe. There's a lot of institutions involved in BTC now, and you just got to wonder how greedy are they. You know, do they want to push it up there and then unload up there into retail and then have it, you know, come back down? I mean, you do have some really high time frame stuff coming through that means one day it'll probably go up and retest areas like this, you know, which is up around 300, but it's not necessarily this cycle. So, okay, and the highest time frame that's closing today is closing above trend. So if it was to pull back and into that area there, it's pretty much 117 to 110, and then I don't know if that'll happen. If it does, you heard it here. If it doesn't, then just delete the video. It's your 300. Okay, let's have a look at SOL. So SOL looks particularly nasty on the daily. Yeah, they've just gone straight back down under the good old Trump trend. Managed to not hard close above that on the weekly, so I'm guessing that that's still going to play some fun and games with us. But, and this is where we insert the ginormous big but. If we get that range trend, although it's down facing, it gives us the ability to bounce the trend back up to the underside of these ranges or to the hold level. So from a daily perspective, as long as this doesn't close with pretty much no wick, and in fact it doesn't really matter what it actually does, because it's already a down facing range trend, and it's very, very, very hard to break a down facing range trend, because no matter how flat bodied this candle gets, the new candle will open on top of the trend because it's down facing. So there's risk in trading down facing trends, but at the same time there's from a different direction, there's actually less risk. So if we do get a bounce off that trend, it could take us for a temporary move back to 226 through to about 228. somewhere up in that area. Maybe a retest of the downtrend that it's pushed back down below. It's not very likely that it will actually come all the way back up from there. However, it did not actually retest the range trend at the top. So if you look at the two most current range trends created, one of them is up there, and that's at about 238, 239. And the one that's about to get created is going to be down here at, say, about 219. So somewhere around that price. Probably closer to where the wick is based on the day rolling over. But if it was to come down, dive that tomorrow, hit this 213, 212 level, maybe hit the trend. It may not even do that, like it might just bounce straight off that and come back up to test something up here. But effectively, the range is actually kind of expanding both to the upside and the downside by being like that. So yeah, it'd be worth looking for entries for shorter term moves, probably just in this, where would it be, 219 down to about 212, and conservatively look to TP back to the trend or the underside of the range. This range is not actually broken. So if we consider the level up here at 226, it isn't broken. So this whole thing could be a fake out sweep, and then we go down, we take all this liquidity, we push back up, and as long as it's all done in the next 24 hours, it can go back up above there. Now, what is going to stop it will be the trends. So we'll at least try to stop it, and it would have to push all the way back up and create a hold level off the top of the previous daily candle, which means getting above 232, if it actually wanted to be in a position to be able to break the trend. So yeah, I'll be looking at this, probably adding to longs when we come down into this area down here, and then laddering out depending on how it reacts to the resistance as it goes up. And yeah, the most tricky bullish thing they could do based on this structure is to dive the bottom range trend, and they'd probably do it quite early in the day, so it would be one of those things where they could spend more time down here getting people to capitulate, and then they'd be building up an order, and then they could, as long as they do it within 24 hours, push back up here, and then go, and that break level there at 236, this one, 236.977, it does not flip into a higher time frame resistance if, actually, sorry, it does. Yeah, so they would probably have to spike through that and hit that trend. Yeah, so because this candle is going to close without being able to accumulate back to the break level. So yeah, the most tricky thing they could do is push down here, sweep the bottom liquidity, go back up within 24 hours, but I probably would say that anything above 236.977 would be bigger resistance, and it would be the first touch since creation, so it could sweep it. So yeah, it might sweep up to the range trend and then probably have a secondary dump. So I'd say that's pretty much the range on the daily that you could play in. But it doesn't, yeah, it does look like they actually probably want to do that. Sweep down, push up, bigger dump. Unless they do close up above that range trend tomorrow or the next day. So looking at the 2-day, so 2 days rejecting, it's on the wrong side of trend. It's got a prior trend to retest down here. It's got a really old range trend coming through at 216. So it's all sort of in that same area. A big old range trend from back in February. And so that's 216. Got the body of a whole candle down there at 213, wick at about 216. So it's all in that same area. And then you've got high time frame support, but that's all the way down at 199. Don't know if it'll be coming down to 199 in a straight line. Looking at the 4-day, 4 days pretty nasty. It's going to break trend. And as you can see, they've got the body of the 4-day just sitting on the trend at the moment. So if it does break trend, create new trend, it'll open on the wrong side of the trend to be able to do a dump off any resistance that they basically deem fit to dump off. So they could just reject straight off the backside of that trend, which means it's not even going to move above, 223-ish. It could just go straight down. It's got a hard closed level down here, 208, 210. You've got your other levels before that, so I don't know whether it's going to come straight down and see that. And let's have a look at. Okay, so this is the 5-day I mentioned. So the 5-day should bounce the price back to 238.555, which would be in line with hitting that daily target. But what I think the intention of this massive sell pressure as we go into the end of the day is probably to keep the candle below the trend. And if they can do that, then when it bounces back up, it'll just run into the trend, and that could stop it before it actually is able to go to its target. So if it runs up and hits the backside of that range trend, it's probably around 231 to 232. The backside of the main downtrend, which is this one coming through here, then that would be 225 or above, so more or less an instant fall, just to go up a couple of bucks and then dump. There's more resistance up there about 240 if it comes up and tests one of the older range trends. If we go wick to wick on that, it's actually is about 240. So yeah, I think the biggest push you could probably see from this is going to be up to the backside of these trends. Maybe it does go all the way up and hit the target at 238, but if they wanted to push that to 238, they probably wouldn't be pushing it down so hard now. They'd be letting that thing just move back up to its target, which currently it's not quite entered the body. Yeah, keeping it under trend. It's almost like it's just kept in a perfect position to not quite enter the support and make sure that when it does enter the support, it's in the worst place possible to actually move back up again. So sort of implies pretty cheeky behavior to have a further dump. And the 7-day, so 7 days is going to close, create a new downtrend. It's going to have some support kicking in from basically 126 down, and it will have a trend to run into, which is going to be about 233, depending on how long it takes to get there, maybe 232. That would allow them to take out all that 100x leverage on the short time frame. So that could be the plan. Stuff up the 5-day, reject further, hit the 7-day, push up to the trend, takes out the 100x leverage, reject off the trend. Very structured. Okay, looking at the 8-day, it's going to get a range trend for resistance through here, which is going to mean about 235, 234 to the upside. It's going to shift the main trend into resistance as well. Same thing. So then it would have to basically reject back to the uptrend, which is held pretty well through this entire time. So it could reject back to 204 if it went down. Retested the hard closed trend is 200. The uptrend is about 202 to 204. So that's where we start to get back into some of those really big key levels. So 204 to 189. So it looks like this is going to probably flip the resistance to the top side. The $1 million question is, does it go down first or does it go up and then down? Which it's also closing back under the break level from, what's that break level, 226? Yeah, it's also closing back under 226.09, so it may not even make it to the trend. It could just reject off that. Really just depends on how bearish they want to be. There will be a whole bunch of sell orders loaded on something in here, one of these levels, and when it hits it, it'll go down. So that's, and 10 days pushed back up, retested the back side of the trend because it's opened on the wrong side of the trend a while ago. It's got a hold level. I'd say that's going to push it back down. If that goes completely to its target, it's 179.5, so it's pretty bearish. Like when you look at that time frame, 179.5 would put it back into the hold candle down here. It would put it lower than people are probably expecting it would go, but it could. It may stop when it gets to the trend, and it may stop when it gets to the high time frame support around 188, 189. And the hold candle is only a single hold candle, so this is more consolidation than ranging, so wouldn't be too worried about 179 yet. And 14-day, we're going to get some support in there at 217, but we're going to shift the trend topside, so we're going to get new resistance, and that's about 233-ish. Got the prior trend running through there, but we're sort of just on that at the moment. So as long as it doesn't pull back much more before the end of the day, then we'll have 2 things to deal with. But if it pulls back any more, then we're going to have 3 things to deal with. So that might make the rejection from a lower level. And 20-day is rejecting off the 247 level, which has been going on for a while. It's creating a new, very slight new uptrend today, which is positive. If it wasn't able to reject all the way back down, so that gives some pretty good support basically from 208 through to 196, 197, and yeah, your really old high time frame levels coming through there at 204, 188. So like I said, I don't know if we'll get to those, but you've just got to look at it and say, well, we have rejected off 247. That is a 20-day level. It's failed to close above. Where's our next 20-day level? Well, the next 20-day level is 204. So it's come down. It's hit that. And so we are literally still in that range, so 204 to 247 until something breaks. And it's slightly more positive on the higher time frame because the trend has arrayed to the upside, so that means strength to the upside. So looking at the 28-day, interior trend is going to shift to the top side, so that's going to give a bit more resistance. We might be opening under the wrong side of the prior trend, so that's not great. We may do a retest of the hard closed levels, so that's starting to bring that 188 back into the picture. 188, 189 sort of area. 35-day is rejecting. It may find some support around those 200s, low 200s, but failing that, it's probably going to come back down to those 180s. And it's also shifting the trend again. That goes back up into the 250s. So I think, like, looking at all of this, it's becoming sort of very clear that there will be a pretty decent move that's going to come about, and The question is just which way does it go first, because you start to look at a really high time frame like this where the trend is shifting. It's going to introduce resistance and a target around the 250s, but it's also introducing the possibility of a retest and down in that sort of 180 to 190 area at the sort of lowest, which would be things like these range trends coming through here. They've all got confluence around that 189 plus sort of area. So yeah, the question is, do we dump and then push up, or do we push up, which really brings even more longs into the market, and then dump through them? But yeah, it's not looking like it's just going to be up only from this point, that's for sure. And the 56-day, same thing, failing to close over break levels, failing to close over high time frame supports. So there's just and trends are going to move to the top side as resistance. Effectively, the wedge that the price is playing in is changing, so it's going to move up to here, and this is bullish because the top side just keeps moving up, which basically means that the price is moving up. But as far as first touch rejections, if you reject off the backside of that 253 area again, you've got to find something that can actually support the price. And if it moves back to the trend, in this case, that could be even 170. So it's, you need it to get up there and spend time up there. So spending time at a price point brings the support up. So, and 70-day 204, 189 levels are pretty much the levels there. So that's looking, and not that I would look too deep into things like 140-day, but it's just got the same confluence, 179, 189, 193. So it's all just around that area, and then you got the trend coming through, which is going to be in that same sort of place. So, and failure to accumulate back to the topside trend, which is sitting up at about 267. So that tends to imply that you'll get some kind of blow off top through that topside trend. So, okay, let's have a quick look at these others. So SUI looks like it's gonna, that's a horrible daily candle actually. Looks like it's just pushed all the way down through all of the trends, rejected off basically that entire bird's nest of resistance. And it's kind of just hovering on holding one of the prior daily ranges. So you could argue that that was to be expected because it hard closed that range and this is just a retest of it. But if it closes exactly where it is, it's also back underneath another range. So you could see this get very bearish. It could close below that 3.4543 level and then just dump. But it could even just push up slightly to that 3.4673 level and then reject off that. Really what you want to see from this is actually the price get back up inside that range and close over 3.4673. Otherwise you'd probably just expect more downside. Really, it's going to open another candle, and yeah, even if it just pushes down a fraction from where it is now, it's going to open in a position where it can just do a quick rejection and dump. So that's you could look to long this. In fact, I will be longing this if it comes down to 3.3118 or lower. So basically this whole candle that's sitting down here. So there'd be a pretty decent scalp in there, I'd say. So that would be an area of interest. Just need to be careful it doesn't bounce off that wick, because that wick kind of lines up with the prior broken trend. So it may just bounce off the wick. Maybe a case of entering, similar to what I did with ENA the other day, maybe just enter part of the position and ladder it down through the wick into the body, and then just still target the actual target of the body to be safe, because it may not bounce back up to the target of the wick. That's not as common. So But yeah, there could be a trade there on SUI if it does do another dump. ENA is basically in a very bad position. So it's under the trend, under the range, the last sort of support of the range. It's under the origin support level. So yeah, that's a heck of a rejection. If it pulls back up into the range by the end of the day, then yeah, sure, it'll probably go back up to the hold level, which is up there at 5833. But if it closes where it is, it could just reject straight off the backside of that what was high time frame support, which is now becoming high time frame resistance if it spends too much time down there. And then you'd expect it to travel down to the range trend here at 53 cents and then potentially bounce back up from the range trend to test the underside of the resistance. And as long as it does it all within a day, it's not bad because then it can push back up into the range because nothing's hard closed. But if it spends too much time down here, it's just going to keep going down. The next break is on the daily is down here at 51 cents. And I think the monthly level is like 30 something cents, but as you can see, it looks like it's looks like the monthly hold is starting to push it down. Yeah, so your monthly levels are all the way down here at about 30 cents. So that could be the beginning of the big dump for that thing if it doesn't recover. So I don't think I'll be doing much with that. What we did the other day on this was just scalp the bounce of this candle to get out of the position. So that was that move in there. And I think it's probably just time to let that die if it's going to die and see if it recovers and goes up. Okay, looking at Cook. So it's going to create a down-facing range trend. Very similar actually to a lot of tokens. So it's hard closed these levels down here at 0.012 sort of area. So kind of makes sense. It's probably going to try and push its way down there to actually retest that, probably sweep through that trend and then maybe bounce back up. But where it's closing, unfortunately, it's going to be back under that break level. So it's going to have some pretty close resistance to where the price is, and it may be a pretty quick drop from there. Okay, looking at World Liberty Finance, same thing. Looks like it's going to close underneath the main trend. Yep. Are we breaking the break? Ooh, that's really close. So it may still be, yeah, it may still be within the range. 1803, 1803, exactly. Because the game's not rigged, is it? So it's touched the break of the range, and it's going to potentially close back up inside of it. So you keep an eye on this for one more day. If that closes without touching 1803 again, then you could long 1803 as new high time frame support. But you'd probably only be longing it just to be safe back to 1940 as your first TP, because that would be the prior one, which is not technically broken. So this kind of actual structure like this can spend one more day in accumulation, which doesn't technically break these upper levels. Then it can tap that, and then it can just blast off through all of that. So, and it would come back up to test that 21 cent area. So that's, or maybe that, no, not that. Yeah, so it's not entirely a write-off. It could just be an absolute low, because maybe the big players just want to buy it down here at 18 cents. If it loses this level though, oh boy, you know, the next reverse trend is pretty close to zero. So That'd be funny to watch World Liberty Finance turn to custard, considering who's behind it. Okay, ZEUS. ZEUS weekly is not looking that bad. It's pulling back, but it's not looking that bad at this point. Hype is rejecting off the range trend. It's got no hold level, but it managed to stay away from the break level, so still just waiting to see if this thing comes down to 142.52 or below, because that would sort of be your entries. Good entries would either be the new high time frame support made there on the weekly or the range trend down here. So, yep. Let's see what else we got going on. ASTER looks strong. Definitely not pulling back like the others are pulling back, that's for sure. ETH is creating a daily hold level. It's pulled back in under the range trend. It would be very weird for this not to reject and go lower from this price point. But if it does a quick dump down into that hold candle down there, sort of below that 4241 or lower, if it comes back down to that hold candle, there'd be a pretty decent sort of high probability scalp down there. Right, so pretty much we've been down this path before. We need a pump by the end of the day. This is Fartcoin, by the way. Someone asked me to look at this the other day. So it looks like it's rejected off that older origin support and it's going down, but I won't go too much into that. I haven't really looked at this too hard. Yeah, so we need a pump. If we don't get a pump, we're going to end up closing at some pretty horrible levels, and then you'll get some more dump. If we do get a pump in the next 42 minutes, geez, I better get the video out, then yeah, it might change things, but at this stage it looks like it's, you know, aiming for a bit of a dump in altcoins, and yet BTC actually still is looking relatively strong. So yeah, catch you again on the next one. Like, subscribe, and all that jazz.